Okay, good morning, everybody. Hopefully, y'all are having a great Tuesday. Today is the last day of January. It is the 31st. And so far, we're seeing a little bit of a bounce for the stock market. Currently, SPY is up around $1 for about 0.25% from yesterday's close. We got a decent rally after the employment wages report came in at 1% growth quarter over quarter. So if we annualize 1.01 to the fourth power, since there's 4 quarters in a year, that would be 4% wage growth per year at the current rate, which is still well above where the Fed wants it to be. But the knee-jerk reaction to this so far this morning was positive because it probably came in significantly lower than it has previously. So I'm going to go to the economic calendar. Hope everyone is green today. Yes, sir. I hope so too. Economic calendar. How do you trade options? Well, guess you can watch the videos on the channel for that and tune into these live streams. I can help you as best as I can. I'll show you how I trade options during the live streams, and each week I'm making a video on my predictions for the week. The bell just went off, and let's check in on the economic calendar. So the employment wages were up 1% again, like I said. The previous quarter they were up 1.3%, so the wage growth has slowed down from an annual rate of that would be 1.013 to the fourth power, which will be 5.3% a year, down to, again, around 4% a year. So wage growth is starting to slow down. We're starting to see less jobs available per person that's unemployed, which is something that I covered in my Sunday video, which compares the JOLTS job report, which is coming out tomorrow in the morning, to the number of unemployed people that is measured by the continuing jobless claims. And the numbers came in somewhere along the lines of 7 jobs available for every 1% or 1 person unemployed. And now that has come down to 6. So there's still plenty of jobs that are available for people to hop back and forth, which is why you're still seeing about 4% annual wage growth a year. And that really needs to the supply of jobs basically needs to come down in order for wages to come down, which is why the Fed is raising rates. Good morning, Gary. Good morning, everybody. So right now we're trading at 401.50. We ended up topping out at 402. I think that we're going to be bearish to neutral today. I think that this was a good report, but not a great report. It still shows that there's a lot of jobs available for people to hop back and forth and get higher wages, which ends up leading to good inflation, because if the supply of new money is outpacing the supply of goods, then prices are going to go up because people have more money to spend on the same number of goods, right? If there's $100 to spend on 100 apples, then each apple is going to be $100, or each apple is going to be $1. But now if there's $200 to spend on each apple, now each apple is going to be $2. When does anyone see a pump in Dixie? Maybe after the Fed meeting. So Fed meeting is tomorrow at 2 p.m. And the reason why we would get a pump in the Dixie, the dollar index is what it is if the Fed signals that they're going to raise rates even higher than where they have predicted before. And if you look at the handy-dandy FOMC watch tool, this is a CME Group watch tool. So it predicts where the interest rates will go for this month and then for months after. So for February, there's a 99.8% chance of a 25 basis point rate hike. So basically it's in the bag that we're going to get this 25 basis point rate hike. if the Fed decides to go against this will be the first time in 60 years, which would cause a huge sell-off. But I think that the current Fed is very complacent, and they're just going to do whatever the markets tell them until it goes against what they stated before. So what they stated before is that they're going to go to a 5%. They're going to go to a 5% federal funds rate. Right now, they're at 4.25, so that means that they have 3 25 basis point rate hikes to go. And I think the Fed futures, that's what this is, expects them to peak in September at 4.75. So the Fed futures are actually discounting them by about 25 basis points. So they think that they're only going to do 2 25 basis point rate hikes. The Fed has said that they're going to do 3. And it really depends on inflation. We're still seeing inflation in parts of the economy and not so much in others. We've seen some deflation in home prices and car prices because of interest rates, going up so quickly. But at the same time, people are still able to afford food, services, going out to eat, and, everyday kind of things, which means that the price of those kind of services and items will go up. Okay. So then they expect a 25 basis point rate hike cut, actually, in November. So there was a, 42% chance of a 4.75 federal funds rate, and then there switches to a 34% chance of a 4.5 federal funds rate. So this actually flipped overnight. There was a higher chance of maintaining that 4.75, but that actually flipped to where they're expecting that cut. And then in December, they're expecting it to stay the same at 4.5. So basically, the Fed futures are expecting the Fed to cut rates sometime by the end of the year, whereas the Fed itself has came out and said that they're not going to cut rates this year. So there's conflicting kind of opinions between the Fed and the market. So at some point, if the Fed is going to stick to their guns, they're going to have to go against the Fed futures for the first time in 60 years, which would be pretty tough for the markets to digest, to say the least. Does a report say what kind of jobs are available? I've seen a lot of people on LinkedIn saying they've been laid off, their tech jobs, but every restaurant is hiring. It doesn't say what kind of jobs. I think you could probably look into the employment reports and maybe find the details if you go to the Bureau of Labor Statistics. There's definitely a lot of tech layoffs and a lot less hiring going on in tech right now versus, like I've been saying, services are still very hot. Everyday services and food items and things like that are still doing very hot. So yes, we do still need a lot of employees there, but growth slowing down means that tech is going to be in a slump. So we are going to see less hiring for those kind of jobs, those high-end kind of tech jobs, white collar, whatever you want to call it. We're going to see less hiring for that. We're going to see less growth for the tech industry versus that of the services industry. So I would say, though, probably in maybe like 9 months, then we're going to start to maybe see deflation for services and everyday goods. At some point, people are going to tap out on their credit cards, and we've seen consumers' credit card debt go up a shit ton. Let's see. Fred, consumer credit card. So this is credit card and revolving loans, which has reached another all-time high as of January 18th at $948. I think this is $billion. Yeah, billions of dollars. Versus before COVID hit, it was at $850 billion. So credit card debt and other revolving loans are definitely on the rise. And with higher interest rates, it's just going to eat into people's buying power and take up more of the average person's expenses than it would previously, which is going to diminish their buying power for everyday goods and services. But it might take a little bit longer than we're seeing for, tech and high-end items. I would like the Fed to raise quickly so the inflation doesn't prolong. Yeah, I think that's what they really should do, because if they continue to, do these 25 basis point rate hikes after 25 and then pause, and then maybe they do another 25, then yeah, they're going to prolong inflation, which is going to hurt the consumer that much more. Whereas if they just rip the Band-Aid off with the 50 basis point rate hike, yeah, we're going to see pain in the economy. We're going to see people getting laid off. That's inevitable in order to get inflation down, though. We need to have people get laid off from their job in order to cool off inflation, because there's been so much excess wealth that these companies have come up with to hire people that may not necessarily, have the qualifications for their job. And, those people that aren't doing well in their job are inevitably going to get fired, which will decrease the money supply, basically. And when the money supply decreases faster than that of the production of goods, then prices will start to come down. But right now, we're still seeing more money in the economy, more money flowing through the economy than the production or the supply chains can keep up with. So we will still get inflation until that point. But anyway, heading on over to my Robinhood, I want to check in on SPY2. So we are starting bearish for the day. Currently trading at 401. I'm neutral for the day, neutral to bearish, like I said, to start this. And I think, I don't have my phone to do this, but I think I'm going to do an iron condor today. I think we're going to bounce. We already bounced at 398, so this is the bottom of the risk range. So what the risk range is basically is where the markets expect the stock to be on a given expiration date. So this one, the expiration date for this risk range is Friday, and I don't think that we're going to go below this risk range before the Fed meeting. So I'm assuming that we're going to be above $398 today. And then for the upside, that's kind of hard to say. I want to say 403, but I feel like we're too close. Maybe the high of yesterday, around 405. So I want to check to see how much credit I can get out of that, though. Because, if yesterday I did a put credit spread, but the credit for it was so poor, even though I was right, I ended up taking a loss because Robinhood decided to close it early for a higher price than what I originally got credit for. So I'm going to try to make sure that I get a decent credit out of this. But yeah, my assumption, we're going to be above 398, but we're probably going to be below 405. So the reason why I think we're going to be below 405, I think that the markets are fearful of what Jerome Powell might have to say tomorrow at 2 p.m. And the reason why I think we're going to stay above 398 is because I don't think that we're going to get that far of a sell-off outside of the risk range before the Fed meeting. So neutral assumption today. But I want to make sure that I get a good credit out of this. If the credit's not good, then it's not worth it. So assuming over 398, that by itself is paying $12 in credit. That is actually an okay credit, I would say. And then for the call side, assuming under 405, that is going to pay us another, whoops, accidentally did puts. There we go. Calls, assuming under, geez, I can't freaking click today for some reason. That's paying us another 14 cents in credit. So we're getting a total of 26 cents in credit for a $1 spread, which means that we're risking around $75 for each option that we open. This is going to be an Iron Condor, assuming that we're going to be above 398 but below 405. So I would say that's a pretty decent trade, unless momentum starts to shift up. So let's give it a minute. Let's actually look through a couple of studies to see if we're bullish, bearish, neutral. So the way that I like to look at it is by using RSI. So RSI is currently at 63. So above 50 means that we're bullish. I definitely think that we have a bullish start to the day, given that the rally after the employment wages was decent, like 0.5%. I think that could be bullish. And right now that's paying 24 cents. So I don't want to get a poor credit because I wait too long. That's kind of the issue of waiting too. Are there certain types of trades you no longer see feasible to execute for Robinhood? I would say if you're going to do a low credit spread, so if you're getting something like 10 cents or less for a credit spread on Robinhood, I probably wouldn't take it. My reasoning behind that is because Robinhood is going to close your trade at, if it's close to your strike prices, Robinhood is going to close your trade. Oh, geez, the bid on this is dropping like hell. But Robinhood, if the stock is close to the strike prices that you choose for a credit spread, Robinhood is going to close it at 330. And if, the price of it is way higher than what you originally got credit for, you're going to take a loss. So I'll show you the trade that I made yesterday, and why I don't think it was a feasible trade to make. I opened it for 8 cents of credit, and I had to close it. I was forced to close it for $27 of debit. So for that trade, I took $19 of loss for each one. Whereas if I got, say, maybe a 15-cent credit, if I had waited a little bit longer, then I would have taken at least less of a loss, right? So anything under 10 cents of credit on Robinhood, I probably wouldn't take for a credit spread. Yeah, even if you have the collateral, that's interesting. I would figure if you had the collateral that they would be fine with it. Like if you have enough money to front the 100 shares or whatever, I would think that they would let you keep it, but that's interesting to know. For this trade, let's see, we're risking 75 to make around 25 for each one. I want to say that I'm okay with putting up like 400. Actually, let's do 300. 300 in risk means that we can open 4 of these at 25. My only concern is that we are tilting bullish on the RSI. So I think I'm tilted bearish for the overall market, so that might not be good in terms of hedging. God dang it, the freaking bid just dropped like 3 cents on me. Oh, this is annoying as hell. All right. The lowest I'm willing to take is 23. Right now it's at 22 for the bid. If they can't give me 23, then I'm just not going to take it. But yeah, my assumption, we're going to be neutral today. Looking at the RSI, we might be positive. So it's more likely that we could see 405 than we see that 398 level. But I'm getting $92 of credit for this trade, risking 400 minus 92, so $308 of risk. And that's if we go above 405, or if we go below 398, then I'll take that loss. But Waiting on this trade to get filled. Jesus Christ, it's taking forever. Good old Robinhood. You can always count on their trades to take forever to fill. Do I think AT&T will be affected by the Fed meeting? They could, given that they saw a decent rally after their earnings report, if I remember right. Or, let's see. Yeah, 2026. Yeah, so they started at 19. Now they're trading at 20. So they could see a decent sell-off if the rest of the market sells off. I'd have to look a little bit deeper into their earnings report, though. Let's see. They did 61-cent earnings per share versus 59 cents expected. So it was a small beat, but a beat nonetheless. And I think that AT&T, T-Mobile, all of the phone services companies, they're still going to do well because people aren't going to cut off their phone line because we're going into a recession. So I think that AT&T and these, services companies are still going to do okay. But given that they went up after their earnings report, if the Fed comes in more hawkish than expected, and if Powell gives a more hawkish tone than what the markets expect of him, then I would see a decent sell-off coming for AT&T. Did I ended up closing that IWM option? Yes, I did. I was tilted too bearish, I felt like. So I actually took risk off the table by closing that IWM option. Hi, Learning Habitat. Oh, speaking of learning, I actually started to read Technical Analysis A to Z yesterday. I found a link to the free version of it that I'll try to pull up here in the chat. Still waiting on that damn Iron Condor to fill. I don't think that we're going to get filled at 23. We got filled on one of them for 23, but then the rest, we were unable to cancel. So it actually did end up getting filled for. What the hell? I don't want to max out my IRA. What do you think? I'm going to retire traditionally? I'm not trying to retire when I'm 60 years old. I want to be chilling at the beach whenever I'm 40. All right. Still doing what I love, though. Don't need that. Okay. So, new options alert, premium 101. Just opened a new SPY Iron Condor, expiring today, 131. I got it at 23 cents credit each. And I'm assuming over 398. And below 405. I wonder if I can do day trade. Yeah, there we go. Cool. All right. Well, it said it had been partially filled, but it also said that I couldn't cancel my order because it... What is going on here, Robinhood? Why are you doing this to me? Either it's partially filled or it's fully filled. Ugh. Sometimes Robinhood can be so glitchy. Some nasty barcoding. Come on. Like, why can't Robinhood just be normal sometimes? Am I buying options right before the meeting or at the close today? Maybe. Maybe. Your order was canceled. Please submit another one. Okay, great. Thank you. Thank you for doing as I asked, Robinhood. Okay. Let's try this one more time. Now they're going for 20 cents in credit each, so edging on the side of not opening this because the credit is shit. I was getting 23 cents and now the bid is 20, so I don't think that it's worth it at 20 cents. That's the punishment for not using Aries. I'm trying, man. I'm really trying out here. I have to move money over to Aries in order for me to get approved for, or get rid of the 90-day restriction that I've got. And right now I am broke in cash at the moment. Strangle for the meeting? No. I never trade strangles when it comes to big Fed events because you're going to pay double the price, and I don't like overpaying for things, so. I am a cheap hoe. Okay, I guess we're just left with having one of these iron condors. Oh, there we go. Now we're getting 22 cents in credit. Please, for the love of God, fill my order. I just want one. Just this once, Robin Hood. And then the following times. But yeah, we're trading at 402 right now. My assumption is 398 to 405, so we're basically right in the middle of it. So that means that the credit is going to be worse than it should. Why do I keep... Alright, I'm going to try to do it at 21 cents, and then that's the last order I'm willing to put in. If you're not going to give me 21 cents, then I don't want it. There we go. Okay. Open 3 more at 21 each. I should probably type in premium 101. Yeah. So total credit 21 plus 21 times 3 plus 23, $86 divided by 4. Average credit now is 22 cents, 21 cents. Average credit 21 each now for 4. So hopefully that trade goes in our favor. Right now, SPY is currently trading at 402. Just going to keep monitoring it, looking at the RSI. Currently on the hourly chart, we're at 54. If we're looking at the 2-day 5-minute, we're currently 63. So we're still bullish tilt. But it does seem like we're losing momentum to the upside. You're seeing some tops, a double top basically right around 402.25. So we'll see if that ends up continuing or not. The volume definitely increased for this candle, but then it's slowed down ever since. So people are indecisive. But yeah, started reading Technical Analysis A to Z. Did I ever link it here in the chat? No, I did not. I am... There we go. Books. Knowledge. There you go. So Technical Analysis A to Z. Something that I've always struggled with is technical analysis. And I actually learned a little bit from it. Reading it this morning. Let's see. Let's flip to the page that I learned something from. So it was talking about support and resistance levels, which I already know. But it was talking about volume around support and resistance levels. If I can find it. Support occurs at the price. This is supply and demand. I thought this visual was very interesting. So where the resistance meets the y-axis on a supply-demand graph, that's the last the last buyer. So that is the demand curve, and then support. So the last person willing to sell an option is where the graph meets on the Y curve for the supply. The lowest price that somebody's willing to sell, basically. But what I was looking at was trader's remorse is what they call it. So on page, well, I don't know if there's pages here, but figure 16, I guess. Starting here, talking about trader's remorse, and then it goes into volume around this. If I can find it. All right. A good way to quantify expectations following a breakout is the volume associated with the price breakout. If prices break through the support or resistance with large volume, and then in the trader's remorse period is on relatively low volume, then it should continue. So it's called penetration. So if it's going past a resistance level, that you see a peak once it goes to the resistance level, and then a drop in volume afterwards, then it'll usually continue because less people are remorseful about the trades. And then conversely, if the breakout is on moderate volume and then you see rising volume afterward, there's more traders' remorse, which means that there could be a change in directions. Come on now. Why is this person... Ugh. Why are people like this in my Discord? Somebody's posting links to nude photos. Ugh. This is a trading chat. You got the wrong place. Good morning to all in the chat. Please join me in moving the number of likes up from 6 to 36. Great way to let YouTube know that the Foxy guy... Thank you, Crypto Peter. You're too kind. 6 to 36. Consumer confidence came in lower. Didn't expect the consumer confidence coming out today. I guess I probably should have checked the economic calendar. So that might be why we got that sell-off starting, I guess, right now. Let's see. Consumer confidence for January came in at 10. God dang it. I don't care about what Senator George Santos has to say. I want to hear about the consumer confidence. So consumer confidence came in at 107.1 versus 109 expected. Prior was 109 after being revised. So a small miss on consumer confidence of 2 points on 109, so like a 2% miss, which isn't a big deal, but if consumer confidence is coming down, then that means that more people might be expecting a recession. And something that we saw in the last Michigan economic report is that basically nobody in that report was expecting a recession. So this consumer confidence report, it might actually end up changing sentiment, but I'm still pretty confident, thinking that we're going to be above 398 today. So still going to hold my iron condor open. Let me go over to the economic calendar. Good for inflation. Yeah, that is good for inflation if people expect a recession. That would cool off inflation. That also means that the Fed doesn't have to raise interest rates as high. So that would support the markets in going up, actually. But you also have that dual fear, basically, of the recession, too. So you kind of have to balance that out. But let's see, it came out at 10 a.m. Consumer confidence. So this was the big report for today. I want to look at historical. Where's the link for the 5K channel? Oh, I ended up, let's see. tradearies.com, everything options. So you can join with that link. You'll get a free month's worth of premium Discord, I think. And then you'll get $100 back after you deposit $500, but they do it in $20 increments once a month. So you have to keep your account balance over $500 for 5 months in order to receive the full $100 benefit, but then you will get the free premium Discord like right away, as long as you message me or one of the Aries people in charge of it. But let's see. So for January, the report that came out today came in at 107. This is still relatively high, though, right? So if we're looking at previous, back in July, this was 95. In November, this was 101. So this is actually starting to kind of make a little bit of an uptrend. If we look at it on a line graph, it's definitely, like, if you thought this was a stock, you would think that it's neutral or possibly bullish, right? So not exactly good in terms of recession fears and the Fed maybe pausing interest rates or lowering interest rates in fear of a recession. But, you know, it is a change of sentiment from a hot consumer sentiment last month, so I would say it's kind of neutral. But we are starting to head down a bit, currently trading at 401. Fed says FOMC meeting began at 10 a.m. as scheduled. Why would they have to confirm that it started at 10 a.m.? It's kind of weird, but okay. Calendar easy to read. I like how it notes the impact. Yeah, that's really why I love the economic calendar and using this one versus others. Like, it tells you the significance, it tells you a description of it, it tells you the bullish bearish part of it isn't exactly accurate, I would say. It's for the US dollar. I kind of wish that they would do it for stocks instead of the US dollar, but so higher than expected earnings should be taken as positive. It was lower than expected, so that's bearish for the US dollar is what they're saying. And if you look at the Dixie, I think it's unchanged, but let's double check. So Dixie after 10 a.m., it did end up dropping to a low at 102.20, but then it ended up coming right back. So basically unaffected by the report. All the earnings stocks for this week are on a decent rally today after, the huge sell-off that we saw yesterday. Not too surprising. I really wish I was able to sell this AMD put that I bought whenever it was trading at 71. Currently, we're trading at 72.70, and they're reporting today after hours. So if we look at my earnings analysis for AMD over on my Notion, expected earnings is 67-cent earnings per share, $5.51 billion in revenue. Prior earnings was 54 cents last quarter. So they're expecting a rise in earnings per share, which they should be able to do because this is a high-tech company that's been making a lot of money over the last couple of years, which means that they can buy back shares and they can give stock employee compensation, which will rise their earnings per share. And basically they can give Wall Street whatever earnings per share they want to see in terms of non-cap. And then in terms of GAAP earnings, which doesn't account for those things, they're probably going to come in negative, but the headline that you're always going to see is going to be the non-GAAP number every time. You're never going to see the GAAP earnings as the headline number. It's a little bit manipulative, but that's the market that we trade, right? And a year ago, this was 83-cent earnings per share, so they're expecting a decent drop down of 19%, whereas they expect revenue to actually be up roughly 14%. So if we add these two numbers together, 19 plus 14, since they're opposites, This means that they've seen a drop. They're expecting a drop in margin from last year of around 33%. So between the top line, revenue, and the bottom line, earnings per share, they're expecting a 33% decrease, which is pretty rough because these chip maker companies, they were making money hand over fist over the last couple of years because of the chip shortage, or whatever you want to call it. I think that it's all manufactured, but again, that's the market we trade. And now, since they were expecting the chip shortage to last for a lot longer, they bought all of these chips up that are now just sitting on inventory, basically. And in order to get rid of that inventory, they have to lower their prices. So once they lower the prices, that means that they're getting lower margins on their sales that they make for their GPUs, their CPUs, and, you know, whatever else they're selling. They have to decrease their margins in order to get all the excess chips off of the shelf, basically. SPY's actually coming down a bit. Currently trading at 401. The VIX is still under 20. That I'm a little bit surprised about. Not sure if I want to buy any more VIX, but UVXY it's probably dirt cheap right now. Probably under $5 if I had to guess, or actually exactly at 506. I think we could see a decent rise in the VIX if Fed is more hawkish than expected. But that is if, right? We don't know exactly how the Fed is going to come out. Just got approved for trading options on Robinhood. Pray for me. I'm praying for you. We all got to make this bag, right? Got to pay for this inflation somehow. Trading Qs or SPY. I already have some trades for SPY tomorrow. I'll show y'all my trades that I have for the SPY. So if we go over to my Robinhood, I've already got these trades open that are expiring 2/1 February 1st. They are up around 50% already. I originally bought these at 42 cents. Currently, they're trading at 63. And my assumption is that we're going to be bearish and below 404. I might end up closing sometime by the end of the day, though. And the reason why I want to close before end of day is I do have a bearish tilt already, assuming that AMD is going to go down, assuming that NVIDIA is going to go down. So I need to get rid of some of these positions just so I'm not over leveraged to the downside. And if we rally after the Fed meeting, then, you know, that would just screw me over. I think, though, that there's a possibility that we might rally. Given that we've seen a decent sell-off, you know, around 2%, it might not be a bad idea to assume that we're going to be bullish after the Fed meeting if they come in more dovish than what the markets expect. I think if Fed Chair Powell always says this, and I think if he says it, I think the markets are going to interpret it as bullish. But if he says something along the lines of we're going to stay data dependent, I think that the markets might actually take that as a bullish thing. Because the data is starting to show signs of disinflation or inflation coming down, which means that the Fed has room to stop raising interest rates and possibly cut rates by the end of the year. But I think if they start to cut rates, then inflation is just going to pop its head back up, just like we saw back in the 1970s. So not in their best interest to do so, especially with inflation still at 4% for core PCE ex housing. Excluding housing is what that means. But we'll have to see, right? There's really no telling with it, but I would assume he's going to say something along the lines of data dependent. The markets are going to take that as bullish, and we're probably going to head up. So I'm probably going to close this put debit spread. I don't know when I want to close it exactly, though. That is what I'm deciding on. Might have should have closed it whenever we were trading at 400.63, that support level, but wasn't quick enough to make that decision. Aiden says they love me. I love you too. Thanks for being with me. Do you consider the dividend and debit spread strategies? That I don't usually consider it, but that is something to note for in the money options if you're trading debit spreads. I actually had something happen to me a couple weeks ago to where I got assigned because of a SPY X dividend date, and I didn't really even notice it. So Robinhood ended up exercising and assigning the options to me. I think it was actually a credit spread that was in the money. So I ended up taking max loss when I wasn't expecting it because somebody decided to exercise on me for the dividend. But yeah, it's definitely important to watch out for X dividends. But, sometimes I'm just mindless and don't really remember an ex-dividend date for SPY or whatever stock I'm trading. I usually don't trade dividend stocks to begin with, though. Like most of the stocks that I trade are, SPY, which does have an ex-dividend date, but it's usually Apple, AMD, all the big names that have a lot of volume behind them. So I don't usually worry about dividends. What do I think of Intel put credit spread? I'd be hesitant on it after their earnings report, especially with AMD earnings coming out today. I think that could spell some trouble for them. But I'm going to try to close out of this put debit spread that's expiring today or tomorrow for the Fed meeting. Right now they're going for 56 at the bid, 59 at the ask. I'll try to sell them at 57 if I'm lucky with it, or 58 maybe. I've got 7 of them. Originally opened them at 42 a piece. So let's see if this order ends up going through or not. Probably not because Robinhood, but we can try. All right, I'll try to close it at 57. Looks like SPY is making a move up right now, but try to close it at 57 instead of 58. If it can't fill at that price, then Robinhood sucks. So I'm trying to close it at $3.99. I originally paid $2.94 for it, so a little bit more than $100 profit, $105 profit that I'll make from this. There we go. So I ended up getting filled at 57. Originally bought that again at 40 something. 42. Profit taken. Closing options alert. Premium 101. Just took profits on the 404, 405 SPY put debit spread that expires tomorrow, 2-1 at 57 each. And again, I originally opened those at 42, so let's try to find the opening. Market overreaction after the Fed, then ride the rally up. Yeah, could be. I think, though, the way that I'm going to trade it, I don't know if I want to close at whenever the decision comes out at 2 p.m. or if I want to do it at 2:30 whenever Fed starts or Powell starts to speak. That's going to be the doozy. Let's see, though. Let me make sure that I get this in. So I originally opened them at 42. Oops, I can't spell. Open 7 at 42. which means that I made 57 minus 42, 15 times 7, $105 of profits. Can't get fills with Robinhood anymore. Not surprised. Robinhood is the worst in terms of fills. Like, sometimes even if you sell at the bid or buy the ask, you're still not going to get filled, and I don't know why. What's the date today? Today is Tuesday. So it's not Thursday, not time to buy stocks yet. I've been dollar cost averaging $100 a week into a couple names, Fulgent Genetics and Tesla. But yeah, I'm kind of tilting bullish tomorrow, and that might actually help us with our hedge to the downside too. Let's see. Since I'm assuming we're going to be below 405 by the end of today, I would say there's a good chance we get like a $3 rally on it, at least. Let me... Getting acid reflux. Getting old. Okay, so assuming that we rally $3 from where we're at right now, we're assuming it'll go over $405. Currently, this trade is going for 42 cents each, which is an okay price. I usually try to pay less than 40 cents, though, so if we assume that it'll go up 1%, to 406, we're paying 38 cents each. I'm not a huge fan of it. I might just buy just a regular call option that expires tomorrow. Right now I'm looking at the 403 strike price at 288, so the break-even's roughly 406. If you're looking at the 402, break-even is 405.40. I don't know. Kind of hard to pay that much of a price for a call option ahead of a Fed event like this. I think, though, either we're going to sell off a shit ton or we're going to get like a small rally. So either we're going to sell off like 3% or we're going to rally like 1% is my guess. So I might even do a strangle for it. With strangles, I don't like how much you pay for it. So let me see if it's a decent pay. But assuming we go over 405 tomorrow, we're paying 43 cents for that. So that's expensive by itself. But if we assume that we fall good 3% for where we're trading right now at 402, that would be $8 drop for 2%. 3% would be $12. So if we get a 50 basis point rate hike, we're probably going to sell off by 3 or 4%. So that would lead us down to 390. The odds of it, super low. But there's still, an okay chance that the Fed does that. And I would set the expiration date for that actually to the next day. Because the Fed meeting is scheduled for 2 p.m. Right? So if it starts at 2 p.m. and you only have 2 hours for SPY to drop by 3%, it might take that last 30 minutes that you need, and Robinhood's going to close you out in that last 30 minutes. So I would set the expiration date for the 2nd. And that by itself is going for 55 cents. So if SPY is between 390 and 405.52, you'll take a loss. Max loss is between, let's see, this is kind of a funky looking curve, but so basically it's a strangle but with separate strike prices, or separate expiration dates, I should say. And it's going for 55 cents, so our max profit is $47 each. I don't think that's great. I don't think that the risk reward is worth it for me. No, other people might have different preferences and might see that trade as a good trade, but for me, I don't like it. I would rather take one direction or the other. If I'm wrong, then I'm wrong, and I'll lose money. But I would assume bullish tomorrow, over 405, and looking at the calls, that would cost me. Oh, Jesus Christ, I can't press buttons today. February 1st, 404, 405, call debit spread. Going for 42. Okay. I might be willing to pay 42 for it, but right now we're trading at 402. So we need to assume where the markets are going to end the day. I think we're probably going to end the day. I think we might have a bullish tilt of the day, and I'm neutral, so I think that we might end the day at 403. So maybe we do see 406, but I just don't want to pay. Let's see. I don't want to pay $40 to assume that SPY will go up 1% between today and tomorrow. It just seems overpriced. I'd rather pay $42 to assume that we're going to go up $3. Makes more sense to me. Like, it's an extra $2 and $1 lower expectations. So for me, that's worth it. For this trade, I'd probably be willing to put up maybe 250. So lower risk than I would usually put up. Usually I put up like 300. Obviously, this is a binary event. We could get, the Fed doing a 50 basis point rate hike. As low as the possibility is, that is still a possibility. And I don't want to get murdered on that. So, gonna open these. Oh God, I just overpaid for them. But open 6 of them at 258, assuming that we're gonna be above 405 tomorrow. New options alerts. Premium. Just opened a new SPY call debit spread. This one expires tomorrow to 1 at 40. Let's see. How much did I pay? 258 divided by 6 of these, 43. So I didn't end up overpaying each. Assuming Powell will say data dependent tomorrow, and the recent sell-off makes me think markets could rally around 1% after his speech. So not a huge rally, but rally nonetheless, given the sell-off and given that I would say there's like a 95% chance that he's going to say something along the lines of data dependent, and that would rally the market because all the data has been showing disinflation. What's my thing about NEO? Don't really have any thoughts on NEO personally. I would say that electric vehicle companies, especially those in China, because of the abundance of companies, that a lot of them are probably going to either go bankrupt or they're going to have to merge with one another. But, any company is equally likely to do as well as the next. I would say BYD is definitely a better pick than something like NIO because they're more established. But that's just my opinion for it. And they have a lot more growth potential given that they're such a small company, but it's just very hard in the Chinese economy, especially right now, to be selling those kind of vehicles. Like NIO is like the top tier kind of vehicle, basically. They're like the Teslas. They're actually, I think, a little bit more expensive than Tesla. They're supposed to be a more premium brand. And given that, the economy isn't doing so well in China, I think that they're going to see less sales. What happens to a stock if they're bought out? It depends on what price they're bought out at. So if the person that's doing the deal, the buyer for the deal, is saying that they're willing to pay a higher price for it, then the price will go up. And if the buyer is willing to pay a lower price, then the price will go down. So a good example of it was a company that somebody told me about on Omegle in my video the other day that I posted. It was Shintel, I think, something along the lines of that, where I think Verizon decided to buy them out, and they decided to buy them at $30 or something a piece when they were trading at $52. So they came in way lower, which ended up dropping the stock down. But then you had, Twitter, right? The buyout of Twitter, even though it was being taken in as a private company, Elon Musk decided to pay more than what it was worth, so the price ended up, fluctuating up to that 54.20 or whatever he decided to buy it at. So it really depends on what price the bidder decides. What are my thoughts on AMD? Short-term thoughts, I think that AMD is probably going to come down. Earnings report is tomorrow. So I think that chip makers are going to have a negative earnings report, just like we saw with Intel. It sold off like 10% the day after the earnings report. It did end up recovering a bit, but chip makers are starting to lose the leverage that they've had over the last couple of years, to where they've been able to just hike up the price for their chips because they had a low supply and a shit ton of demand. And now you're seeing the opposite. You're seeing lower demand because people don't have as much money to spend on GPUs. And they have an excess supply because they thought the chip shortage would continue to last for like three more years. And they built up their inventories to excess. And now they have to offload the excess inventory at lower prices. Good morning, Jans. You thought I was Rouge? Puts it is. I've already got a put on AMD, so yeah, I'm assuming that it's going to be bearish. Not sure what the IV is, so I don't know if I would just do straight puts. You could do call credit spreads, or you could do put debit spreads, depending on what IV percentile is. I would definitely check that before you make a decision on a spread or a long option. If you look at IVP, which is IV percentile, AMD currently has an IVP of 37, so that means that 63% of the time over the last year, implied volatility has been higher, which means that it's relatively low. So yeah, still an okay opportunity to be buying puts or buying calls, depending on which way you think it's going. The thing about AMD, though, is they can make their earnings per share look like whatever they want compared to Intel, because they have more cash that they've made over the last couple of years, which they can use to buy back shares of their company, and they can use to give employee stock compensation rather than actual pay, which they can write off and boost their earnings per share. What am I thinking about the processing power for our artificial intelligence? I don't know. I mean, I'm not too nerdy when it comes to artificial intelligence and computing. I'm, I'm all about trading, so I haven't really dived too deep into artificial intelligence. Tried to make a trading bot with ChatGPT, but that ended up being a little bit too time intensive for me, so gave up on that. But I would assume that AI would require more computing power, though. So you might see a decent demand for chips pick up because of the advent of artificial intelligence, maybe. Yeah, that it's possible, but I think that's more of a long term perspective than a short term. And I would doubt that they would give any kind of guidance on artificial intelligence and the need for computing power on it. Details on the put debit spread. Yes, sorry about that. Um, our call debit spread. Strike prices I chose. What was it? 404, 405. There we go. All right. That one should be up a little bit since we're seeing a decent rally in SPY, almost at 403 at the moment. I opened 6 of them. Looks like we're dropping from. Actually, I don't know why we're dropping on the account today. Let's see what the today's returns are. I guess the AMD put and the Nvidia put are losing a little bit of value. I need to close one of these by the end of the day, and I think I want it to be Nvidia instead of AMD. I think I'll hold the AMD put. Let's see the total return. I'm still up by 63 for the AMD or the Nvidia put. I just don't want to be over leveraged to the downside in case AMD sees a surprise beat and their stock ends up rallying, which is usually what happens. It seems like the starting season. It's trading at 194, and the spreads were up to 125 each. Now they're trading at 110. But I originally paid 94 cents a piece for 3 of them, I guess. Let's see. I'll do 105 will probably get filled at, so that would be 105 minus 94. That'd be $11. That'd only be $33 in profit. I don't know if it's really worth it to take profits at that. Maybe if we do 110, let's see, that would be $50 in profit, which is still low. I think I'll just hold it. Hold it and pray. It does have a few more weeks until expiration anyway, so we do have a little bit of time on our side for the Nvidia puts versus the AMD put expires this Friday. And I guess that can also be my bearish tilt for tomorrow too. Since I am bullish tilted with the call debit spreads that expire tomorrow with the Fed meeting. But yeah, I gotta go to the restroom right quick, so let me turn off right quick and I'll be back in like 2 minutes. About to pee myself. All right, I'm back. All right, so currently up by $14 for the Iron Condor, assuming between 398 and 405 today. Originally opened these at 21.5 cents credit each. Currently, they're trading for 21 cents credit. Where's the halt for what? What's up by 197% or 179%? Let's see. Yeah, looking at SPY, currently we're trading under 403. We got the resistance roughly at 403.38. Still assuming neutral by the end of the day. Probably even a tighter range of 400 to 403 rather than the 398 to 405 I was assuming. Dallas Fed Services revenue for January was positive 4.9% versus negative 0.6 prior. So that means that services in Dallas are doing really hot. Again, this is what I've been kind of talking about. Services inflation still very hot because it's still affordable for most people. Whereas the price of cars, the price of houses is less affordable. Just because they're such higher end goods than your everyday services and food and stuff like that. Texas services sector outlook was negative 15 versus negative 20.5 prior. So outlook for Texas services is starting to get a little bit better. Let's see what other news we got. McCarthy says President Biden should say he is willing to negotiate on the debt ceiling and find common ground in the Wednesday meeting. Yeah. Politicians agreeing with one another, that would be a miracle, wouldn't it? Greg has a poster of himself holding a Robin Hood look. No. Not that narcissistic. Just a little bit. Oh. By the way, Shark, I ended up bench pressing 240 today. So I weighed in this morning at 160, ended up benching 240, so I hit 1.5 times body weight for bench press today. It felt nice. I think I still got like 10 pounds in me. I think I can do 250, which is what I'm supposed to be doing in about 5 days. I was really hoping that I could hit 275, but I think I was a little bit too over-ambitious with that goal. But I could have probably hit that 240 for a good 2-3 reps if I really pushed it. All right. Nothing's really making me money right now. Everything's just kind of trading flat and not making much yet, hopefully. Hopefully things change around. Looks like that 403 price target is getting closer and closer. We're definitely positive on the RSI, I would say. If we load up the RSI MACD studies, currently trading at 65, so well above the 50. So as long as we're above 50, that means we're bullish, that we're continuing to be bullish. If we go below 50, then that would be bearish. And it looks like we basically caught a bid or went up as soon as we went just below 50 on the RSI. So probably just going to be, might continue to be bullish for the rest of the day. Luckily, we have the hedge with the call debit spread, assuming over 405 tomorrow. So that'll kind of help us out if we do see a rally between now and the end of the day. If we do go to the 405 strike price that I ended up shorting with Iron Condor, assuming that we're going to be below 405, and then we get the call credit or call debit spread, assuming that we're going to be above 405 tomorrow. So those will kind of cancel each other out basically if we do continue to go up. The volume is definitely going lower and lower. So as we approach this resistance line, keep in mind if we see a lot of volume going into it and then not a lot of volume afterwards, that means that the rally will probably continue. But if we see low volume going into it and then high volume afterwards, we'll probably end up getting rejected. So this is the volume down here, this blue that you're seeing. So watch that as we approach this 403.38 level. Hi, Stefan. Welcome. That's a nice way to spell that name. I like that. Stefan with 2 Fs. German, really? Got people from across the globe. Call me Mr. Worldwide. All right. So we're seeing low volume going into it. So if we see low volume, high volume afterwards, then we'll probably come back below that 403.38 mark based on volume and technical analysis. But keep in mind, technical analysis has never been my strong point. So really couldn't tell you exactly how it's going to play out. Deciding between an out-of-the-money call credit spread or a debit spread. I'm assuming... Oh, I guess that person left, but... Let's see. I guess the big stock to watch today is going to be AMD with their earnings report. I already have the trade open. They fell 4% yesterday to regain 2% today. They're basically at the open... a little bit higher than the open of yesterday, or actually a little bit lower than the open of yesterday. So decent rebound. I really wish I was able to close my put whenever we were trading at 71, but that was pre-market. Can't trade options in the pre-market, unfortunately. There wouldn't be enough volume to substantiate the trading on it, but day before that we were at 75.39. We might see an okay rally. I think that they're going to be on the earnings per share, or at least come in line with earnings per share, which could be positive. But that's only because of the write-offs that they can do with share buybacks and employee stock compensation. It is what it is, though. Like, even if they be based on that, that's still a B, and the stock market is going to take it as bullish. Let me borrow the rotator cuff. My freaking triceps were really feeling that, my back offset. So I did 240 for one, and then I ended up backing off to 205 for 3 sets of 6. And like, my triceps really got involved in the last couple of sets. I've never felt that much engagement on my triceps on bench press before. But I guess once you're moving, a good 200 pounds, then you got to start using your entire body, basically. Do I have any Tesla plays? Not currently, no. Not a huge fan of trading Tesla just because the volatility is so high for it, which makes their options that much more expensive. I do have shares of it. Currently, I think like 30 shares or roughly around 30 shares of Tesla. So I'm bullish on it long term, but I don't like to trade in the short term just because of how choppy it is and because of how expensive the options can get. All right. So that call debit spread's currently up by 20. And we're approaching that 403.30 mark for resistance. So let's watch the volume as we approach SPY. That was 403.38. Volume is still low. So if volume picks up afterwards, probably going to get a rejection. It's moderate volume going into it. But if you cross it and there's a pickup in volume, that would mean that there's basically trader's remorse is what they call it, which would end up sending it back below 403. And it looks like we actually ended up topping at that 403.38 mark, so we might not even cross it. So a call credit spread assuming under 403 or 404 today might not be a horrible idea either, based on technical analysis at least. Looking at volume as your basis for it. If you assume under 404 today, that option is paying you 27 cents a credit. That's a pretty good credit for assuming we're going to trade under 404. We're already up by 0.6% today. We closed yesterday at a price of 400.63. So 400.63 multiplied by 1.0075 would be 404 would be our expected range for today, basically. So this is something that somebody showed me the other day. It's called true average range or average true range, something along the lines of that. If we go to the studies, true range, let's see. True range indicator, and look at the daily chart. The daily expected range, according to this, is 2.75 in either direction. We're already up, let's see, 213 today, so we're only expected to see maybe another 70 cents in rally if we do get one today. But yeah, assuming under 404 might not be a bad trade idea. I wouldn't probably put a lot of money on it just because I'm not super confident with my technical analysis skills yet. Probably like $150, $200 that I would put on this trade. So that would be, let's see, like 3 of these for 25 cents in credit, assuming under 405. All right. Thanks for all the great content, helping me start trading options. I'm glad to help out. Glad I can help y'all. Really makes me happy to help people. Because options trading has always been kind of my passion, and trying to learn as much as I can. Like I'm learning day to day too. It's not like I'm, the best options trader that ever walked the planet. Like I still have a lot that I want to learn and develop, like technical analysis, while I'm reading this book. So hopefully this can translate into me being a better trader and everybody else getting on that same path. But yeah, just open that call credit spread. Not risking a lot on it, but new options alert, premium. Just opened a new SPY call credit spread that expires today. So this is a day trade, 131 expiration, and I got it for 24 each. Let's see, day trade. Make sure to type that. Strike prices 404, 405. All right. So, let's see. I guess I can close out of the call option that I bought before. 1-3, sell to close. I got 4 of these. 14. So that way I cancel out the other order that I had before. So I had a 405, 406 call credit spread and just drop that down to 405, 404, 405. Not enough shares to close. What do you mean there's not enough? Why is Robinhood so glitchy? You don't have enough shares of this contract in order to close it. What do you mean? Why don't I? But yeah, it looks like we're losing steam as soon as we hit that 403.38 mark. But we'll keep an eye on the volume. Volume is actually picking up right now for this last candle whenever we got rejected. So given that we had low volume going into it and then high volume afterwards, that could be traders' remorse, and we might end up seeing a rejection out of it. This is really screwing me up. I have like 3 open positions now because of the new spread, which is confusing as hell. But now my average credit for the call credit spreads is 44. I don't know, man. This is just such confusion. Alright, so it's saying that I got 404, 406 calls, so I got rid of the 405s, I guess. So that's why I can't close the 406 call. Okay, so I'll have to close 1.13 instead of the 4 that I was trying to close before. It's still saying that I don't have enough. Why does Robinhood have to make this so confusing? Did you accidentally press calls and puts when choosing your option? No. It was a call credit spread that I opened, so no mistake on that end. But yeah, the trade that I'm looking at, so it's saying that I have 4 options open. If we go to SPY, that expired today. Let's see. I have the 398, 404 Iron Condor. I have 3 of them. I've got another Iron Condor. Oh, I guess I have to close one of the Iron Condors is what it's telling me. So if I want to close the 405 strike price, I also have to close the put side too, which I guess kind of makes sense. Let's see. So I have 405, 406, and then 397, 398. So I guess since the quantity was different, it kind of screwed things up. I did 3 of the call credit spreads to assume we'll be under 404. And then it was 4 Iron Condors that I opened this morning. So I guess if I had put the same quantity, like 4 of them, then I would have been fine. Am I streaming longer now? Yeah. I've Try to stream for 2 hours a day now instead of the usual just 1 hour a day. Okay, we're picking up a little bit right now. 403.22 at the moment, so we might see a little bit of a break here. Let's see if there's any kind of news that might pull us. Lithium Corporation CEO, extremely low chance. U.S. court pulls permit. Secretary of State Blinken says heard concrete ideas from both Israelis and Palestinians. If pursued, could help diffuse current situation over in Israel and Palestine. Not sure how that might relate to the stock market, but let's see. Sony scales back PlayStation output. Sam Bankman-Fried attempted to regain control of FTX. White House plans to end the COVID emergency. Oh yeah, that was news. Biden is saying that they're gonna cancel the emergency. What is it? I forget exactly the term, but basically they're declaring COVID a non-emergency again. I mean, I feel like they've flipped back and forth like 3 or 4 times at this point, but it is what it is. Getting low volume going into it, so if we see a pickup in volume afterwards, I think that would mean that it would be bullish. All right, so if you have low volume and then you have high volume picking up afterwards, there's no buyer's remorse or trader's remorse. But if you have high volume going into it, low volume subsequently, then you do have trader's remorse and it should fall back. So given that we're going low volume going into it, we might actually see a breakthrough. Currently down by 40 on that trade. All right, so we broke above it now. Volume is starting to pick up. VIX and Dixie fallen. Yeah, the Dixie is down 0.1%. It's kind of flat. The VIX is definitely down 2.7% today off of that $20 high we saw yesterday. But yeah, we're seeing moderate volume coming into this, so if we see a pickup volume after, could rally maybe to the next price level at 406. We're already up 0.7%, so I'm kind of hesitant to say that we'll continue to go up, but seems like the volume technical analysis would support it. Apple will be leaning bullish for Friday. QQQ call options might not be a bad idea. Depends on what the Fed has to say on Wednesday. That will really shift the markets in one direction or the other. And then you have all the earnings reports coming out this week. Apple, AMD, Google, Meta, Amazon. So be on the lookout for those. Where is this 403.38 price target coming from? So the last 2 days, I guess it was Friday's open is what it looks like. Yeah. So Friday's opening price, so I guess it's pretty important. So we'll see if we see a rise in volume or a drop in volume after the 403.38 mark gets cleared. We're just having a hard time getting past it right now. Just kind of edging on it, but not quite clearing. At least we got a good credit for the credit spread. I'd be more worried if we got a shit credit for it than now, but let's see. I opened at 44 credit each, basically. They're going for 53, and They've been trading between like 33 at the low and around 45, so I think there's a decent chance that these pull back in value, hopefully. And we can make a good profit out of it, but we gotta see what we do at this 403.38 mark first. No decision yet. I would think that would be the range for today, though, between 403 and 400 and a half or so. Unless we just continue to go past that. Might see a recovery before the Fed meeting tomorrow. We're seeing a decent recovery for the Qs after selling off as hard as they did yesterday. It was down like 1.9%, and now it's up by 0.9. So basically, it's recovered about half of the sell-off yesterday for the Qs. Guess we can get rid of the true range indicator for the 5-minute chart. It's not really useful. All right, looks like we might start headed down. 403, like 402.90 is the mark that it had a hard time getting past before. So if we come back below that, might come back to the middle, I guess, between 400.63 and 400.38 or 403.38. So that would be around 402 if we do slip below 402.90, but currently just above it. Just above it. I really don't see a reason to be super bullish going into the Fed meeting tomorrow, but given the decent sell-off we saw yesterday, we could see a recovery from it. The call debit spread I opened is up by 12 at the moment. The iron condor is down by 15, so they kind of balance themselves out, but not entirely. The book map, I haven't heard of that one. I'll have to look into it. It's not any of these on the right, it doesn't seem like. Let's see. No. Like the level 2 options, I guess. Where it shows you like the orders that are being placed for buys and sells and the volume behind it. The order book, I guess. Maybe. Yeah, orders to get filled, right. So it basically shows you the volume of each price. The thing is, it changes so quickly, so it's kind of hard to use that as a tool to see where the markets are going, but all right. We're just sitting pretty in a, like 30-cent range between 402.90 and 403.38. That's annoying as hell, but we'll see which way we go. It's like watching paint dry. ask them for the free version. Okay. Yeah, I'll check it out. You could also probably use volume profile, might be a decent study to add. I don't know if volume profile is that useful for like a 2-day 5-minute chart though. But this will tell you like where people bought and sold at. So basically it gives you an idea where people might buy or sell later and take profits or cut losses, whatever. Let's see. Let me zoom out the auto zoom. So lots of volume at 402.80 for the last couple of days. Next huge volume peak was all the way up at $406. So maybe a little bit more room for downside to 402.90. There's a lot of volume at that level, I guess. So if we do end up going below it, you might see a decent sell-off from it. Currently trading at 402.80, so seems to be a rejection so far. Off of that high at 403.38. I'm going to get rid of the volume profile. Don't need it anymore. I might take profits if we go down to like 50 RSI, just in case we continue to be bullish for the rest of the day. I don't want to have to stress about holding this into the end of the day if we're trading above 403, and I'm assuming below 404, then those spreads would not be doing too hot depending on what we grabbed them at. But now the iron condors are slightly positive. I'd say there's an okay chance that we come down to like 41 cents a pop. Currently they're trading at 45, so still a decent ways to come down. I thought we got rid of this. What the heck, man? There we go. Yeah, to me this seems like a pretty clean rejection based on the volume. So we saw a pop in volume afterwards, or we saw a pop in volume on it and then a drop in volume afterwards. So that means there's no remorse for people that were selling it at 403. So I assume we're probably going to continue to trend down, but just my best guess based on what the 5 minutes of studying that I did on volume with that technical analysis A to Z book. We'll have to test it out a little bit more and try to actually put it in practice. That's the best thing you can do, is you can read all the books that you want and study everything, but if you don't actually put it into practice, then it means nothing. So Crypto Peter, good to have a few tools and not the 15 I like to use. Yeah, I feel like a lot of people use a ton of tools on their screens. Like if I use a tool, I'm not just gonna keep it on my screen. Like you saw me pull up the volume profile, but now I don't need it anymore. I use it as needed rather than just keeping it on the screen. I feel like a cluttered screen is the worst thing. It's just too much stimulation for me. All right, we're We're still at 60 on the RSI, so we're still bullish. I'm hoping we come down to 50 on the RSI, but I don't know if we'll get that or not. Right now we're just balancing basically at 402.90. No decisions yet. Yeah. Yeah. I usually don't even keep my RSI and MACD on the screen either. Usually I'll leave those off too. Usually I can tell if a stock is bullish or bearish. It's pretty clear that the trend is up this morning, right? So you don't necessarily need to have RSI and MACD on the screen at all times. Sometimes it's best to just look at the price action, see what we're trading. Right now it's at 403, and every time we come down to like 402.9, it kind of starts to bounce up. Right now we're at 402.9 exactly, so if we do get an increase in volume, we might end up going to the next price level at 403.38, but we shall have to see. It's a wait and see game. Yeah, no problem, Tito. Thanks for being here. Glad to have y'all here. I just wish we would break out in one direction or the other instead of just trading. Like, this is such a small range to trade in, 402.9 to 403. Like a 40-cent range. It's always the most annoying thing to get trapped in these kind of positions, where it's in such a small range and you're holding a iron condor that's just one strike price higher. Yeah, definitely a boring day today. Definitely so. Yeah, ES is the S&P futures. If you do /ES, this is the S&P futures. So this is the continuous contract. So right now it's trading at 40.53. We ended up almost coming down to 4,000. So that's probably why you got that bounce this morning. That psychological 4,000 number ended up being a point to rally at, basically. Didn't quite reach it, but we got pretty close. Yeah, it's a very boring day, though. You're right, Roddick. Gotta love boring days. Alright. I'd say this is a pretty solid confirmation. We're going to come down, but we need to see a rise in volume first for confirmation of it. Any thoughts for Snapchat? I think it's one of those companies that spends money like a drunk sailor, so I probably wouldn't invest in it myself. If you're going to trade Meta earnings, you could also trade Snapchat earnings, which is scheduled for actually today. So Snapchat is reporting earnings before Meta, which is reporting earnings before Google, and I want to trade Google myself for earnings rather than trading Snapchat or Meta. But if you think that, they're going to have a poor earnings report, which is definitely possible because Snapchat, I think, is one of those companies that's running out of cash. Not exactly sure how quickly. I'd have to look into their latest earnings report and their cash flows, but they've seen a decent rally from 7.30 to 11.33. Earnings per share has been negative a couple quarters and then positive a couple quarters, so they're kind of hit or miss in terms of profitability. The earnings per share is expected to come in at, I can't see it, but let's see. Earnings whispers. Snapchat, their earnings per share is expected to come in at 9 cents according to Earnings Whisper, and 10 cents according to Wall Street. And if we check into their latest earnings, Snapchat investor relations, yeah, Snapchat is definitely one of those volatile stocks for earnings, but let's see what the IVP is actually. The IVP for most stocks has been pretty low, but this one might actually be decent if... Yeah, so the IVP here is 70. I wouldn't buy a call or a put because the IV percentile is so high. I would rather buy when IVP is like below 50. And if you're going to trade Snapchat earnings, I would rather do it with spreads. But looking at the investor relations page, going over to their financials and the quarterly results, the latest quarterly result was Q3 of 2022. We want to look at the SEC filing. And you want to look at operating cash flow or cash flow statement. So they're actually positive free cash flow, which is good. 56 million or 56 $56 million that they made from the business itself. So they're a profitable company. Investing activities, they made $65 million. Most of it coming from maturity of marketable securities, so maturity of bonds. And what else? Financing activities. They lost $500 million from repurchasing shares of their stock. So since they purchase shares of their stock, they can make their earnings. Again, this is one of those companies that can make their earnings per share look like whatever they want because they have a lot of cash that they've made over the last couple of years. But their cash pile has dwindled down to $1.9 billion. So I would think that they would be hesitant to spend another $500 million to buy back their stock. I think that would be pretty reckless to spend 25% of their cash pile in order to support their stock price. So this one I would actually think might end up coming in worse than expected for earnings per share. So the way that I would probably trade it, if you're bearish, just straight bearish on it, probably going to head down to $10.60. So I would say put debit spread, assuming under $11. If you think that it could trade flat or come down, then I would probably say that it'll stay below. The next price level I have is all the way at $12.75, but I don't think you'll get an okay credit for that. But that's how I would trade it. Maybe a resistance at around $12. So I would either do a call credit spread, assuming under $12 if you're bearish to neutral, and then a put debit spread, assuming it goes back under $10.50 if you're just straight bearish. IV is implied volatility. Yeah, implied volatility percentile. So basically, it's a measure of where implied volatility is right now compared to where it's been over the last time frame that you have selected. So this is a 1-year chart. Currently, it is at 86 IVP, which means that only 14% of the time over the last year, implied volatility has been higher than it is right now. So that means IV is very high, basically. So when IV is very high, I usually trade spread options because if you try to buy a call or you try to buy a put, you're going to overpay for it. And you're going to get what's known as IV crush or implied volatility coming down, which means that the value of your options will drop with IV coming down, which means that the stock needs to make that much more of a move in order for you to make a profit if you're just buying calls or buying puts. Am I going to stream FOMC? Maybe. We'll see. Depends how many likes I can get tomorrow in the live stream. If I get enough likes, I'll do it. But we'll have to see. Right now, the markets expect Snapchat to move $2.30 in either direction for a $11.30 stock. That would be a 20% move in either direction that's expected for Snapchat this week. I think that's a little bit excessive. So yeah, I would definitely try to do a put debit spread or a call credit spread rather than doing just a regular put. So basically, if you're paying, let me check the break evens for it just so I can kind of explain this point a little bit better. If we do say we think that Snapchat will fall in their earnings report, we're going to buy a put that expires for this week, which is February 3rd for Friday. If we buy this just $11.50 put, we're paying $1.23. So our break even for this is, let's see, $11.50 minus $1.23. Our break even for this is 27 cents or $10.27. So that means that Snapchat would need to fall more than 10% in order for us to make profit. Now, if Snapchat can't make that 10% move, then we don't get to make any profit for this trade. So if it only drops to 1050, yeah, it moved in the direction that you chose, but it didn't move enough for you to make a profit. So because the implied volatility percentile is so high, I wouldn't just buy puts or buy calls. I would rather do spreads. NVIDIA, I'm expecting to come down. I already have a put debit spread assuming so. Made $48 on it so far. And I'm assuming that it'll be below $190 after the earnings report. But yeah, let's check in on SPY one more time. Coming back to 403, so I guess we caught a little bit of support at 402.9. We actually ended up slipping a little bit below it. Volume is starting to rise. That might mean confirmation that we're going to continue to go up on that support level, but I think that'll be the end of trading today for me. Still holding the trades that I had from this morning. So the 398, 404 Iron Condor, 398, 405 Iron Condor, 404, 405 called debit spread that expires tomorrow for the Fed meeting. I think we're going to get a good rally out of it. If Fed Chair Powell says something along the lines of data dependent, I think the markets will take that as bullish. I got an AMD put that expires for this Friday, so I'm assuming that AMD will come down after the earnings report today after hours. NVIDIA, that one expires in a few weeks, but I'm assuming NVIDIA will come below 190. This MAPS put, basically worthless at this point. This is something that I opened like last January. It was a Leaps call option, and then Bank of America Leaps put. I think that banks are still going to have a tough time in 2023, even with the rising interest rates, just because the number of home loans is likely to come down because the price of homes hasn't come down to match the rising interest rates. So less homes being bought, which means that less money is being borrowed, which means that Bank of America and all the banks aren't going to do as well in terms of their profits. So that's the end of today's live session, and I will catch y'all tomorrow at 9:30. See you, everybody. Looks like Crypto Peter had a question right quick. You got a thorough understanding of language of options trading. Watch a gazillion hours. Thanks so much. Yeah, no problem. Have a great day, Peter. No problem, Ian. Thank y'all for tuning in, and I'll catch y'all tomorrow.